Hello everyone, my name is CA Neeraj B. Welcome to my YouTube channel at the rate Accounting Buddy NB. In today's lesson of part 2 in the series of bank reconciliation statement, we will begin with the basics of bank statement and the cash book. Then move on to how matching and unmatched transactions are handled. You will learn how to prepare the BRS both ways, starting with the cash balance and with the bank passbook balance. We will wrap up with the key points and practice questions to sharpen your understanding on the subject. Let's get started. In this slide, we will learn about the format of the bank statement and the bank column of a cash book. We will also learn how to match the transactions between the two and how to identify the unmatched transactions. Let us first learn more about bank statement or the bank passbook format and its contents. Bank statement is an account of the account holder in the books of accounts of the bank. It will have date column in which the date of the transaction is written. In particulars column, brief details of the transactions is mentioned. Then there are two columns, one for withdrawals and another for deposits. Next column denotes the deposits with CR and withdrawals with DR. Last column shows the bank balance of the account holder with the bank. All the transactions in a bank statement are recorded in a chronological order. The transactions which increases the bank balance are recorded under the deposit column, such as cash deposits or amounts received from the customer in cash or by check and deposited in the bank, or interest collected by the bank on government bonds and credited in the account of the account holder. All the deposits are credited in the bank statement. All the transactions which will reduce the bank balance are recorded under withdrawal column. These transactions include payment to suppliers or electricity expenses paid by the bank periodically basis account holders instructions, or bank charges debited by the bank for the services rendered to the account holder. All withdrawal transactions are debited in the bank statement. At the end of each day, the bank statement will show the actual balance of the account holder lying with the bank. In our example, the balance on the last day of the month, that is 31st March 25, is the credit balance of $49,000. Now let us recap the bank column of the cash book format and its contents as displayed on your screens. Left hand debit side records all the receipts or the deposit transactions, and the right hand credit side records all the payments or withdrawal transactions. Now the closing balance of the cash book as on 31st March 25 is 53,500 debit balance, whereas the balance as per bank statement is a credit balance of $49,000. Therefore, there is a difference of $4,500 between the two balances. Let us now find out the difference between the two, first by ticking each and every entry in these two statements. Cash deposit for $40,000 on 1st March 25 is matching. Similarly, transaction number 2 and transaction number 3 on the debit side of the cash book are matching with the transactions on the deposit side of the bank statement. Now we are left with a transaction of $17,500 being the payment received from a customer Tinny Tiny Trading LLC is only appearing in the cash book, and a transaction of $2,500 for interest collected by the bank on the government bonds is only appearing in the deposit side of the bank statement. In the same manner, now we will match the transactions on the credit side of the cash book with the transactions on the withdrawal side of the bank statement. Transaction number 4, 5, 6 and 7 are matching. Now two checks issued for $5,000 and 7,500 are only appearing in the right hand credit side or the withdrawal side of the cash book. It means these two checks are issued but not presented for payment with the bank as on 31st March 25. Similarly, an entry of electricity charges of $1,500 and bank charges for $500 are only appearing on the withdrawal side of the bank statement. I hope you have understood the process of identifying transactions which are causing difference between the cash book balance and the bank statement balance as on a particular date. In this slide, let us understand the impact of unmarked entries. First, let us talk about the entries appearing in the bank statement and not recorded in the cash book. On 22nd March 25, bank paid $1,500 as electricity expenses on the instructions of the business. The impact of this entry on cash book when this transaction is not recorded in the cash book will be that the cash book balance will be higher by $1,500. And when this entry is passed in the cash book balance will be reduced by $1,500. On 28th March 25, bank collected $2,500 interest on government bonds and is credited to the account holder's account. The impact of this transaction on the cash book when the entry is not passed in the cash book will be that the cash book balance will be lower by $2,500, and when this entry is passed in the cash book balance will increase by $2,500. On 31st March 25, bank debited account holder's account with $500 as bank charges. The impact of this transaction on the cash book when the entry is not passed in the cash book will be that the cash book balance will be higher by $500. And when this transaction is recorded in the cash book balance will be reduced by $500. Let us now talk about the entries recorded in the cash book but not appearing in the bank statement. On 27th March and 31st March, checks for $5,000 and $7,500 issued to the suppliers Couple Trading LLC and Jaunty Trading LLC, and both these checks were recorded in the cash book on the date on which they were issued. As a result, the balance as per cash book is reduced. While these checks are not presented for payment, therefore, the bank statement balance is not reduced and thus it is showing a higher balance. On 31st March, business received a check for $17,500 from a customer and the same is recorded in the cash book and also deposited in the bank as on 31st March 25, while the amount is still not credited in the bank. Therefore, the balance in the cash book will be higher by 17,500 as on 31st March 25. Let us now prepare the bank reconciliation statement basis information and unmatched entries identified in the previous slide. We will start with the cash book balance and reach to the bank statement balance. The balance as per cash book as on 31st March 25 is $53,500. The balance is denoted by the word DR, which means the debit balance. Let us first take the entries appearing in the bank statement but not recorded in the cash book and their impact on the bank reconciliation statement. First is electricity expenses of $1,500. This amount is debited in the bank statement and thus the bank balance is reduced by $1,500. Therefore, this amount will be deducted from the cash book balance. Next is an amount of $2,500 received as interest by the bank, and as a result of this the bank balance is increased by $2,500. Therefore, this amount will be added to the cash book balance to increase the balance of the cash book also. Bank has debited $500 as bank charges and thus the bank balance is reduced by $500. Therefore, this amount will be deducted from the cash book balance to reduce the cash book balance also. Now let us consider entries recorded in the cash book but not appearing in the bank statement. The two checks amounting to $5,000 and $7,500 issued to the supplier have reduced the cash book balance. However, they are not presented to the bank till March 25 for payment, and as a result of which the bank balance is not reduced by the amount of these two checks. Therefore, these two checks will be added to the cash book balance. Now a check for $17,500 deposited in the bank but is not cleared and thus not credited in the bank statement. Once all these transactions are added or subtracted from the cash book balance, we will arrive at the balance of $49,000 as per bank book. This bank book balance will be denoted by the word CR, which means the account holder is having an amount of $49,000 lying with the bank. By following this process, we have explained how to prepare the bank reconciliation statement when we start with the debit balance of $53,500 as per cash book and arrive at the credit balance of $49,000 as per bank passbook. In this manner, BRS as on 31st March 25 shows the transactions causing the difference between the two statements. Let us now learn how to prepare the bank reconciliation statement when we start with the credit balance as per bank statement and reach to the debit cash book balance. We will use the same unmatched transactions used for our previous bank reconciliation statement. The balance as per bank statement as on 31st March 25 is $49,000, which is a credit balance. The electricity expenses of $1,500 debited by bank has reduced the bank balance. Since this transaction is not recorded in the cash book till 31st March 25, cash book balance is not reduced by $1,500. Therefore, this amount will be added back to the bank statement balance. An amount of $2,500 collected by the bank as interest on government bonds and credited to the account holder's bank account, it will increase the bank balance by $2,500. However, since this transaction is not recorded in the cash book till 31st March 25, cash book balance is not increased by $2,500. Therefore, this amount will be deducted from the bank book balance. Bank charges amounting to $500 are debited by the bank and therefore the balance as per bank statement is reduced by $500. However, since this transaction is not recorded in the cash book till 31st March 25, cash book balance is not reduced by $500. Therefore, this amount will be added to the bank book balance. Now let us consider the entries recorded in the cash book but not appearing in the bank statement. The two checks for $5,000 and $7,500 issued to the suppliers are recorded in the cash book. Therefore, the balance in the cash book is reduced while these checks are still not presented to the bank for payment till 31st March 25. Therefore, these two check amounts will be deducted from the bank statement balance. A check of $17,500 is recorded in the cash book and is deposited into the bank but has still not been cleared till 31st March 25, as a result of which the cash book balance is increased. Therefore, this amount of $17,500 will be added to the bank statement balance. Once all the unmatched transactions are added and subtracted from the credit balance of the bank book, we will get a $53,500 debit balance as per cash book. In this bank reconciliation statement preparation, we started with a credit balance of $49,000 as per bank book and arrived at the debit balance of $53,500 as per cash book. Basis our understanding of the bank reconciliation statement process, let us learn the presentation of bank reconciliation statement starting with the balance as per cash book. As on 31st March 25, the debit balance as per cash book is $53,500. Let us first consider all the unmatched transactions which will be added to the cash book balance. Always remember, when you are starting with the cash book debit balance, the transactions which are only recorded in the cash book and have resulted into the reduction in the cash book balance will be added to the cash book balance. Checks issued and not presented for payment fall under this category. Therefore, $5,000 and $7,500 checks will be added to the cash book balance. Now the transactions which are credited in the bank statement and have increased the balance in the bank statement will also get added to the cash book balance. The transactions related to interest collected by the bank on government bonds fall under this category. Therefore, $2,500 will be added to the cash book balance. As a second step, consider all the unmatched transactions which will be deducted from the cash book balance. Always remember, when we are starting with the cash book debit balance, transactions which are only recorded in the cash book and have resulted into increase in the cash book balance will be deducted from the cash book balance. Checks deposited but not yet credited fall under this category. Therefore, $17,500 will be deducted from the cash book balance. Now the transactions which are debited in the bank statement and have reduced the balance in the bank statement will also be deducted from the cash book balance. The electricity expenses of $1,500 and bank charges of $500 debited by bank fall under this category. Therefore, $1,500 and $500 will be deducted from the cash book balance. Once all the unmatched transactions are added and subtracted from the cash book debit balance of $53,500, we will get a credit balance of $49,000 as per bank passbook. Now let us learn the bank reconciliation statement process when we are starting with the credit balance as per bank statement. As on 31st March 25, the credit balance as per bank statement is $49,000. Let us first consider all the unmatched transactions which will be added to the bank statement balance. Always remember, when you are starting with the bank statement credit balance, the transactions which are debited in the cash book and have resulted into increase in the balance of the cash book will be added to the balance as per bank statement. The checks deposited but not yet credited falls under this category. Therefore, $17,500 will be added to the bank statement balance. Now the transactions which are debited in the bank statement and have resulted into decrease in the bank statement balance and have not been recorded in the cash book will be added to the bank statement balance. Therefore, electricity expenses of $1,500 and bank charges of $500 debited in the bank statement falls under this category. Therefore, the amounts will be added to the balance as per bank statement. Second step is to consider unmatched transactions which will be deducted from the bank statement balance. Always remember, when you are starting with the bank statement balance, transactions which are only recorded in the cash book and have resulted into decrease in the cash balance will be deducted from the bank statement balance. Checks issued but not presented for payment falls under this category. Therefore, $5,000 and $7,500 will be deducted from the bank statement balance. Now the transactions which are credited in the bank statement and have increased the balance in the bank statement will also be deducted from the bank statement balance. The interest collected by the bank on government bonds and credited to the account holder's bank account fall under this category. Therefore, $2,500 will be deducted from the bank statement balance. Once all the unmatched transactions are added and subtracted from the bank statement credit balance of $49,000, we will get a debit balance of $53,500 as per cash book. Let us remember key points to be kept in mind while preparing the bank reconciliation statement. Bank reconciliation statement is always prepared as on date. It shows the cash book and the bank position as on date. Balance as per cash book means the balance as per bank column of the cash book. Debit balance is a favorable balance in the cash book. It means that the amount is lying deposited in the bank account of the business. It is an asset of the business. Credit balance is unfavorable balance in the cash book. It means bank overdraft, that is the amount payable to the bank. It is a liability of the business. Credit balance as per bank statement is favorable balance, that is the amount lying in the deposit with the bank. The debit balance as per bank statement is an unfavorable balance, that is the amount payable by the business to the bank. Few more points to be remembered while preparing the bank reconciliation statement are: debit in cash book increases balance as per cash book and the credit decreases it. Debit in bank statement decreases balance as per bank statement and the credit increases it. To summarize our understanding, it means when a transaction in cash book is debited, the cash book balance increases, and when a transaction is credited, the cash book balance decreases. All receipts are debited in the cash book and all the payments are credited. When transaction in bank passbook is debited, the bank balance decreases, and when the transactions are credited, the bank balance increases. Bank reconciliation statement is prepared by adding or deducting the amounts of the entries that have caused difference to the balances of the cash book and the bank statement on a particular date. In this section, we will discuss the descriptive questions and their answers. Question number 1 is, what is the significance of debit and credit balance of cash book? And the answer is, debit balance as per cash book means that the account holder has that much balance in the bank, while the credit balance as per cash book means the amount which has been withdrawn in excess of the deposits. It is called the overdraft. Debit balance means the favorable balance and the credit balance means the unfavorable balance. Question number 2 is, why is it necessary to prepare a bank reconciliation statement even if the cash book and the passbook show similar balances? And the answer is, even if balances seem similar, bank reconciliation statement helps detect timing differences, bank errors, or unrecorded transactions. It ensures accuracy and acts as a cross-verification tool for both internal and external records. Question number 3 is, how does a bank reconciliation statement help improve internal control in an organization or business? The answer is, bank reconciliation statement highlights discrepancies between the cash book and the bank statement. It helps detect unauthorized transactions, errors and delays, improve financial discipline and preventing frauds. Question number 4 is, explain with reason why a check issued but not presented for payment causes a difference in BRS. And the answer is, such a check is recorded as a payment in the cash book but not yet shown in the bank statement. This creates a lower balance in the cash book compared to the bank balance until the check is presented. Question number 5 is, how does a dishonor of a check affect the balances in the cash book and the bank statement? And the answer is, if a check deposited is dishonored, the bank will not credit the amount, but the business may have already recorded it in the cash book. This causes a difference, which bank reconciliation statement helps identify and correct. Question number 6 is, a customer deposits money directly into the business bank account. What impact does this have on bank reconciliation statement? The answer is, the deposit appears in the bank statement but not in the cash book if the business is unaware. It increases the bank balance compared to cash book, requiring an adjustment in bank reconciliation statement. Question number 7 is, if the bank has charged interest or deducted fee without informing the account holder, how is it handled in BRS? Answer number 7 is, these charges appear in the bank statement but not in the cash book. Bank reconciliation statement helps identify these deductions, prompting the business to update its records accordingly. Question number 8 is, what would happen if a business never prepared a BRS? Explain the possible consequences. And the answer is, errors may go unnoticed, leading to inaccurate financial statements. Unrecorded bank charges or missed receipts would cause misreporting, poor cash management, and audit issues. Next week on 11th October, in part 3 of our series on BRS, we will first understand the process of preparing BRS, starting with a debit favorable balance as per cash book. We will then look at how to adjust the transactions that appear in the cash book but not in the bank passbook and vice versa. Next, we will focus on the treatment of errors whether in cash book or in bank passbook, including the effect of overstating and understating, followed by the real life illustrations. If you enjoy the content of my channel and appreciate my teaching style, please subscribe, share and like my YouTube channel @accounting buddy.